All right, so CPI obviously came out. The markets moved one way, they moved the other, and then they resumed a general uptrend. Let's call it general bullishness by the close. So that would mean markets up, rates down, dollar down, commodities up, etc. However, it wasn't as strong as I think a lot of people, including myself, thought it would be. I'm talking about the market reaction. The CPI was generally in line with consensus. I still think that it's generally overhyped. And actually, even if the market was up more, I still would suggest that it's overhyped. And the fact that the markets weren't up that much, the Russell 2000 did quite well, but aside the Russell 2000 and aside the VIX slaughter, I still think we could get a reversal pretty soon. And I'm very interested. I think tomorrow might be more important than today. So let's see. Let's go into it. So S&P was up not even 0.5%. However, it did close green. It did recover some of the losses. If we just go to the 3-minute chart, and the 3-minute is my favorite. And this happens a lot when you have news events out. You get the market swinging one way and basically reversing. I promise you, this happens all the time, almost. So let's say you get NFP or CPI or GDP or whatever, a big event, one of those high priority, important news events, especially when it's US data. It'll swing one way and it'll swing another. And there's an opportunity for arbitrage. The thing is, it's easier in hindsight, but it always happens. And this is a perfect example. So down it goes, and it's pretty scary to buy it. Markets have gone up, and you think it's bullish, but we're going down. We're going to go much lower, and then it reverses, and then so this happens a lot. And you can see that okay, in the end we close green, but not by that much. Anyway, let's just go back to the daily because that's ultimately what counts the most. End of day. So what do I think is going to happen? I think we'll have a bit more continuation tomorrow, but not that much. And I think we're going to set ourselves up for a lower high and back down. That's what I truly think. Let's look at the Nasdaq. Very similar. We're just about touching prior support. You can see that. Maybe go a little higher and back down. It could just go back down straight away. We might not make a little high, but I don't think we're going to go up that much, put it that way. And I still think we're going back down. Dow Jones also went up about 0.5%. It's already quite high. So I think there's going to be quite a bit of resistance. So similarly, it'll just go a little higher. And then I'm looking for a red candle tomorrow, actually. Although I still think it'll make a high tomorrow, higher than today's high. Russell 2000, though, you can see very strong. So this will more likely than the others make a high, but there's also resistance very close. So yeah, I think they'll all basically go up a little bit and close red. I'm really hoping for a red close because that will set the stage for next week. Just coming back down, the hype is over and back down we go. And then people will start looking at the detail of the report and probably find out that actually inflation is higher than they thought or than the initial headline gave off. And real inflation is up, real wages are down, the devil is in the details. That's what I'm expecting. I wouldn't mind a little Peter Schiff summary of that because he does a very good job of that. The VIX, though, this was pretty surprising. I mean, the VIX doesn't deserve to be down 11%, closing at the worst close since in a long time. And I mean, if you were to flip this chart upside down and pretend it's the S&P, it's almost like we're going to make new highs. So again, VIX is a buy here, but the VIX is totally broken. I feel really sorry for anyone who's bought the VIX down around here, anywhere near 20 or even 21, because even at 21, it's a buy right now. It's just it's broken. So I feel like never really covering the VIX again because it's just deceptive and broken, and I would almost say corrupt. But anyway, so the market's up by a little bit. I think tomorrow will be probably more important than today. And I think we'll have a red day tomorrow, actually. Not a big one, but I think we'll actually close red. Let's move to interest rates. That did what you would expect. So rates were down because the market was up, because the CPI print was dovish, let's say. So the 1 year down, still hasn't taken out its support down here, and this I wouldn't be surprised tomorrow is actually green, and well, we'll see when it breaks out. I think it will eventually break out. It's just been going sideways for a long time. So the 2 years more important. That's actually broken support. So I think it needs to reclaim support very quickly in order to not go lower. But then again, this part of the yield curve is also being influenced by the longer dated 30-year and 10-year. The 5 year is a bit like the 2 year. It's kind of lost support. The 5 year even worse because it's lost its ascending support. The only thing that can save the 5 year from coming all the way back down to 3.2, I would say, is the 10-year and the 2 year. But the 10-year, same sort of pattern, but this one is kissing, it's touching, it's bounced off its ascending support, and the 10-year is very important. So I think it really needs to hold the line here. And I think it will tomorrow. I think it will sort of bounce just off this ascending support, which is kind of done already. Basically, it's right on target. So, it needs to hold this sort of 3.4 range to eventually go back up. And then it's going to be in a very tight little pennant, and we'll see which way it breaks out. I favor the breakout, not the breakdown. 30-year, pretty much identical to the 10-year when it comes to support. Very, very, very important that it holds that tomorrow. And maybe it's the longer dated yields that actually flush first and then send everything down. But for now, it's holding. Let's see. I really do look forward to tomorrow because I do actually think tomorrow is more important than today. It's really after everyone's sort of gone through all the data, all the charts, like me now, and then I had a more sober conclusion about what to do, and maybe implementing that tomorrow, Friday. So yields essentially down. I'm not going to go through all of the yields, but the European yields, same thing, but they're actually higher. That wouldn't take much to go back up and make new highs, because when you come from all the way down here, you go all the way up, basically make a new high. Yeah, you retrace, and as soon as you curl and go back up, it's like a cup and handle formation, and it will break out and send everything up, send the DAX down, and maybe even influence the US also for a greater bear market. So let's look at the dollar now. The dollar also went down like yields, what you would expect. I still think that this will hold this ascending support. It didn't touch it. I thought it might touch it today. It didn't, but we're not that far off. And maybe my ascending support isn't totally perfect. It almost is. But, we're basically there. So we've lost our 103, 103.5. We lost it a few days ago. And then it was all about the CPI. That's why we went sideways for a few days. And now we're bouncing. We're going to bounce tomorrow, I think, off 102, let's call it. We're basically there today. We bounced off 102. Might go a little lower, 101.5. Trigger some stops, because some people might have stops that are a bit too tight, just under 102. And essentially bounce. And then I'm looking for a curl. That's what I'm looking for. I do still think the market could surprise and just flush early next week and reverse this, and therefore the dollar will start to go back up and yields will go back up, and basically the opposite of what we've seen today. So yeah, the dollar did what I thought, almost touched perfectly the ascending support, and I think it will do so again tomorrow. It will hold support and maybe even close green tomorrow, a little hammer, sort of touches down there, makes a low of day in the 101 area, and then actually closes above 102.3, and then creates a nice little green hammer. And then next week we've got a sort of a reversal play. Obviously, I could be wrong, but that's what I believe. That's also a bit contrarian, because I think a lot of people will think that there'll be continuation today of what happened today. So that's what I think will happen with the dollar. Let's look at the commodities. Normally I go straight to gold and silver, but this time, copper just sideways. You can see it's at resistance here, 4.2. It's made a nice move back up, like all the metals really. But now it's just pausing. That's also, we'll see, it could actually reverse along with the rest of the market. Natural gas is trying to curl here, put a little bottom around 3.5. I mean, if the markets go lower and everything starts to bounce in the opposite direction, so if the dollar goes up, yields go up, I think that might put a bit of pressure on natural gas, but generally it's such a buy around here. So, I mean, I've said it already, I think it's a buy around here. Even at 4, it's a buy. 3.5 even better, but let's see what happens. Oil, I think, is also a bit of a buy. So a breakout of this descending would be very strong. It would take us straight to 90, 92, I think. But again, how will oil react if if the dollar starts to move up, yields start to move up, and the market starts to move down? It probably would go down, but not that much. So I think it would eventually break out of this descending line. You know, even if we go lower and go into the sort of 60s, it's a real buy in the 60s. So if you're able to buy, I mean, if you're lucky enough to get oil down here, this would be strong support. And if it gets there, it will be very close to breaking out. As soon as it bounces, it will be touching this descending line. So I think this is a very, very safe buy, actually. And I wouldn't put a stop. I don't trade stops. I don't, I'll talk about that in a different video. Let's look at gold and silver. This was the one that I was watching, obviously, because I mainly trade the miners. So we took out 1880 early on. I thought that 1900 and 1920 would be in play if the markets in general, right, went up following the CPI. We did touch 1900. I think we even went just slightly above it, but we did close below it. Ignore this red, everything's reset. It was a green day, as you can see. So it was a nice green day. It wasn't the strongest move, just like everything else, the general markets. But it was still a green day, and we touched 1900. And to be honest, there could be some continuation tomorrow. Silver also green day, but look at all the resistance. I said that silver would have a very tough time. Yes, it ventured above 24, but it closed way below it, if I can say that. And, to me, silver's just exhausted. It's saying, look, I don't really care about the news. I need to go lower. I need to catch my breath. I need to find new support and then, drive back up with that new support and then maybe take out this descending. So for me, silver is keeping gold down, the exhaustion in silver. Gold is, I know this is beautiful. I mean, breakout, this descending, a little channel. This is you can say a bull flag, but bull flags like this are usually bearish. And that's also why I've been selling into it. And then when you break out of a bull flag, I mean, that's quite impressive. It's quite rare. But now that we've done it, and I think there's exhaustion elsewhere, I really feel like there's not much higher this can go. There's not that much higher that this can go. I didn't sell anything related to gold and silver today. I did trade other stocks. So I'll actually cover my portfolio too, because there were some other interesting moves. But I'm not sure. I'm looking forward to tomorrow. If there's a reversal, then I think gold could really, I think you'd have like a bearish engulfing candle here. And then it's just all the way back down to here, 1830, 1825. I can see that happening. And then at that point, you can just delete this. In fact, I can already delete this line. This is no longer applicable. The ascending one is. So I feel like you could come all the way back down and test the ascending line. Maybe not tomorrow. I feel like tomorrow, across the board will be a bit of a sideways red day, but that doesn't mean it'll be a massive bearish engulfing. But I just feel like gold had to go up, right? Because everything went up. It's CPI, it's a big day, but it didn't go up that much. It didn't close above 1900. It's generally tired, but it had to have a green day. Silver had to have a green day, even more tired. This needs to come down. Not only because I've sold my miners, but I think there are a lot of people who stayed in it the whole way who probably feel like, yeah, maybe we're done here temporarily. So anyway, that's my take on gold and silver. They were up, but they are really tired, especially silver. Let's look at the miners. The miners had a decent day, actually, given that the metals didn't perform that strong and given that the general markets were not that strong. You know, we closed sort of near high of day, hammer. I think they are also a bit tired, but you know, I do feel like they could make the next level, and I think the levels that I've drawn are pretty much correct. Okay, so let's look at GDX. GDX, yeah, so this level here, 33, essentially, you know, maybe if we go a little higher, it would be 33.5, which means I'd be selling at 33.49, but I don't own GDX. You know, so for example, what I do is I'd be watching GDX. If we take out 33, if we keep going higher, the markets are going up, the dollar is just sort of weak, and and the metals are strong or have enough strength for another slight push higher, I would look at whatever stock I'm willing to sell, whether it's Newmont, Wheaton, Endeavor, whatever the stock is. And as soon as I see GDX in the 33.40 zone, looking for 33.50, I would be selling there, you know, because I don't think GDX will touch 33.50. But anyway, it's I think there's enough strength for a little move higher. Let's see how much of a percentage move that is. So 2% to hit 33. If there's a bit more strength, 4% is asking quite a lot. But I'd be selling around between 2 and 4% of a move in GDX. And there I would be selling because I haven't sold in a few days, but I've sold this area. So yeah, I didn't sell today. It wasn't high enough from my last sales. GDXJ, the next resistance is very close, 1.5%. I mean, if GDX is going to do 2%, you're going to get at least 2-3%. So for me, GDXJ, I mean, we're at resistance now. Yeah, you could try and sell it around 40, the run for 42. So I don't know, 41.69 or something, you know. So yeah, I mean, just to summarize, the miners was stronger relative to the metals and the general markets. Let's see if they have any follow-up strength, but I feel like there's another sell zone coming here. At one point, it will totally get exhausted, and I think that there'll be a very strong, violent drop, something like you know, 2 or 3 days, and we just all the way back down to prior resistance acting as support. So now, with all of that said, I'm going to move to the crypto sphere because Bitcoin, and I think I made a video in the morning covering, because Bitcoin had already tested essentially this descending line that I've drawn. I think a lot of people saw this, 18,400-ish, tested it. So 18,400, I say that because not only is it roughly where the descending line is, but it's also the high of here, 18,300 something, and that's actually where it was. And then I believe it went back down. Actually, let's move this. Yeah, I mean, I don't want to look intraday, you know. Yeah, there it is, 18,300-ish, 300 and something. It's basically the exact high. Yeah, look at that. Total, you know, Bitcoin really does adhere to technical patterns more than any other asset, I feel. I don't know if it's like the Japanese FX traders or something, but it's really amazing. Anyway, it touched it, went back down, waited for CPI, and went up with everything else. So now Bitcoin has really closed above its descending. And to be honest, I kind of feel like it will run up to 20,000, maybe even higher, maybe even 20,980. I'm going to move this all the way up here now as resistance. Because I feel like, and I was watching it sort of intraday, it was going up when the markets were going sideways or down. So I just feel like it's disconnected a little bit from the markets and could go up even if the markets tomorrow, for example, goes sideways, or like I said, you know, go up a little bit, go down a little bit, close red, not much. That equals a sideways day. And I think Bitcoin is allowed to go all the way up, even if that happens in the general markets. You're allowed 1 or 2 days where you act independent because it's kind of done its own thing for a while and it's been totally crushed. So on news closing outside of descending line, it's allowed to go up. So I'm watching 20,000. And I am looking forward to that because I'm in one crypto miner and the crypto miners did very well today. I mean, if you think 5% on Bitcoin is nice, you pretty much got 10 times that in the crypto miners. So let me show you Hive, which I've held. And I saw this breakout. I did add a little bit down here, not much, but I let this run and I did my first sell today. I did it at 284 and I actually sold again at 313. Just little nibbles. Basically, what I bought all the way down here, I think it was around 150 something. I think it was just here as we started to curl. I think I bought just before breakout or at breakout. I chased once, but that chase doesn't look so bad now that we're up essentially 100%. So that was nice. I do see a follow through actually because we closed nicely. I think the markets will be sideways down tomorrow, but I think Bitcoin, like I just said, will be up. So I think we could run to 3.5. I don't know if we can go all the way to 4. That would be asking a bit, 20%, but it's doable. I mean, when you see this run all the way up here, same sort of thing, and we've got a long way to go. So, and you'll have several days where you can see the exhaustion. So I don't think the run is over yet. If I look at the other crypto miners, you can see similar moves. Mara, look at that. Actually, that closed right at resistance. I would sell, if I held that, I would sell some and let it try and run to maybe 9, 10. Riot, not the greatest, but it's already made a hell of a move. Wow, I didn't notice that. It's a nice move. Yeah, that could keep going all the way to 7. Bit Farm, beautiful. Deserves it. It's been crushed. That was the best move of the day. So yeah, they did well. And something else I noticed, look at MicroStrategy. That is, I mean, it's at resistance, but it's at a very important resistance. Not only is it this horizontal resistance here of, let's call it 210 to 213, whatever. But look at this. You got this descending one, which maybe I can make a little tighter. You could say it's actually closed above it, but roughly. But then more importantly, you got this massive one. And, they all coalesce right here. So if you've got any sort of move in Bitcoin up, you could get a squeeze here all the way to 280. So watch out. How much of a move is that? 30%, definitely doable. Look at them. They all did 30% roughly. So, but ultimately, I think everything's all going all the way back down and going to new lows, and this will go bankrupt. But still, that doesn't stop you from being able to trade nicely. And this little Silvergate that's been crushed could also pop a little bit. Anyway, yeah, as you can see, everything crypto related stock wise did very well and can potentially still go higher. And that's why I like them, because when you're comparing it to, first of all, the crypto coins, the altcoins, look at them, they're down against Bitcoin. They're basically unchanged on the day, some of them red. But it's really Bitcoin, Ethereum, and really Bitcoin. For me, if I was trading the coins, I'd just be trading Bitcoin. But anyway, finally, I just want to mention some of the large cap stocks that did not move the way some of you may think they should have moved. Look at Google, red, unchanged, nothing special. Okay, the market's gone up huge besides the Russell 2000, but when you've got these really big monster blue chip large cap stocks like Google, Microsoft, Apple, etc., the ones you see here, and then not really up. Well, that's why the S&P and the Nasdaq are not really up. But then you have the little small caps. That's why moving, the more riskier ones, right? You can see the sort of riskier stocks. I mean, look at this Bed Bath & Beyond up 50%. It's been several days in a row. It's absolutely wild. I'm not trading that because this, everyone knows, is going bankrupt. But when you've got the sort of small caps moving up, leading the Russell 2000 up more than the others, you kind of think it's not sustainable, because of the large caps, the real industries that are not going bankrupt, the AMDs, the Apples and all that, when they're unchanged or red, kind of feel like it could just reverse. So, look at Apple, for example. It's just flushed the lows, it's come back up. I can just see this curling back down, taking this out. And if this Apple makes new lows, it's done. You can't have the market rallying when Apple's going down. Microsoft, yeah, okay, bounced off support. Google, we've just looked at very, very weak looking sort of stocks. I mean, let's look at Amazon. Amazon I own, that's why it's all the way up here. Just nibbled a little bit. Okay, wasn't really able to close above resistance well enough. So for me, I'm just going to summarize now. It wasn't the strongest move. We could have a little bit of a move up tomorrow, but I still think that we're going lower. Had the markets been stronger, even much stronger, I would still be bearish because fundamentally, I think that there's a delay when you raise rates. There's a delay of like a year or something. So I don't even think the markets have felt, the economy has felt the effects of the first rate hike, and we've had quite a few, right? We went from what 0.25 all the way to 4, over 4% of, so we have like 400 basis points of interest rates that the economy hasn't really felt yet. We have quantitative tightening that hasn't really been felt or started yet in reality. We've got a war, like the Russian counteroffensive has started. They've taken over Solidar. They're going to take Bakhmut. So that's a little black swan that's been lingering. Europe, none of these problems, even the ones from a decade ago, like the Greece debt crisis, nothing's been solved. The debt keeps going up. The inflation is nowhere near as good as these data releases suggest. So for me, and the stock market isn't even that strong. I mean, like I said, technically, or even these large caps that sort of drive most of it. So, and look, my cursor's on Credit Suisse. You think that's over? So I'm bearish. Let's see what happens tomorrow. I think tomorrow is actually more important than today. I think it might be red, and I think if it's green, it's not green by much. And I think next week we go lower, and that will paint a sort of chart that shows lower highs, lower lows. So imagine this sort of goes back down again. Yeah, it'll look bearish very quickly. So anyway, that'll do. It's a long video. Sorry about that. Obviously, it was a big day and I had to cover several assets. I hope you enjoyed it otherwise, and speak tomorrow.